management of Action Construction Equipment, that's ACE, joining us on the show. Remember, ACE has inked a joint venture with a Japanese company, Kato, to foray into heavy-duty large cranes. So that's a big foray for them, new segment. And on the back of that, let's understand the kind of opportunities this unlocks for the company, both in terms of potential orders and what this could mean for the financials. To discuss all that and much more, we've got Mr. Saurabh Agarwal, the Executive Director of Action Construction Equipment, joining us on the show. Mr. Agarwal, hi, morning, good for your time. Now, this joint venture that you've gone ahead and inked, it plans to invest around 200 crore rupees. How will this investment be split between ACE and Kato, and how will it be phased, if you can give us a timeline?
The total investments in the joint venture are going to the tune of up to 200 crores. And it is a 50-50 joint venture between ACE and Kato. So obviously, half of it will be coming from Kato and half of it will be coming from ACE. And the investments are going to be in place from day one.
Understood. And Mr. Agarwal, let's talk about your overall project. What is the timeline for that? When do you expect the first commercial production to begin by? And when should the joint venture generate its first revenue? How do you see this revenue scaling over the next few years? Bunch of questions, but appreciate if you could answer all of them.
I think we should be able to start commercial production as soon as Q3, if not Q4. But we are hopeful that we should be able to do it in Q3. And going forward, I think in the short to medium term, over the next 2 years, 3 years horizon, the JV should be able to reach a 300 to 400 crore revenue target. That is what we are planning for, and it looks like that we should be able to achieve that.
Understood. And that sounds good. Mr. Agarwal, what will your go-to-market strategy be when it comes to this joint venture? Will the initial focus be on India? Will it be on international exports? And other than that, which international geographies are you going to be targeting?
See, obviously, the initial focus of the joint venture for the first 1.5 to 2 years would be more towards domestic, more towards Indian market. But eventually, it will expand outside India to the global markets. Because, what Kato brings on the table is global technology, engineering expertise, processes. And what ACE is bringing on the table is manufacturing capabilities, operational capabilities, strong supply chain ecosystem, and cost efficiency. So this could create a powerhouse for bigger cranes within the country, with a very good potential of exporting these machines out of the country. In India, we are looking forward that the ACE network would totally be involved in distributing these cranes domestically. And the Kato network, the global network, will be used for distributing these cranes outside India.
Okay, understood. Mr. Agarwal, I'm just trying to understand the fine print of this joint venture. If you can help me understand what incentivizes Kato to manufacture and sell through the Indian joint venture route instead of exporting directly from Japan. How competitive is India's manufacturing cost structure versus Kato's existing facilities? What are some of the benefits here?
The main motive is to be more competitive, whether for domestic markets within India, that is the prerogative of ACE, and also for Kato for their global markets. And by producing in India with using global technology, a lot of cost efficiencies are going to kick in, which will allow Kato to become more dominant as compared, going forward into the future. And it will also provide us a big edge in India with Japanese technology with respect to our endeavor to, trying to dominate the bigger crane, bigger capacity market within the country.
Okay, and Mr. Agarwal, let's talk about your competition. Who are your key competitors in India and globally? And the reason I ask you this is because we have this proposed anti-dumping duty on imported heavy cranes. That's at play. Could this create a structural advantage for the joint venture versus your global peers? How would the positioning be then?
Domestically and even in a lot of global markets, the Chinese have been flooding the market with very competitive products in the last 7, 8 years, 10 years. And India is also plagued with a lot of Chinese imports with respect to heavier cranes. And this is also one of the main motives for bringing in global technology and to be able to accelerate the growth of heavier cranes domestically produced within the country. And yes, there has been anti-dumping investigation within the country with respect to heavy cranes, crawler cranes, and truck cranes. And a very favorable order was released by the Ministry of Commerce through DGTR, which is responsible for recommending anti-dumping duties. So anti-dumping duties were recommended, but so far they have not been implemented or notified by the Finance Ministry. That is the current status as of.
Okay, understood. That puts a lot into perspective. Mr. Agarwal, what kind of revenue opportunity do you see for the joint venture over the medium term? You did say that this is going to start translating into your financials soon, but what scale of business do you believe it can achieve?
As mentioned earlier, in the medium term, the JV can easily scale up to 300 to 400 crores of revenue. But going forward, as this is not only a domestic opportunity, but also a global opportunity, both for ACE as well as Kato through this joint venture. So the size and scale can be much bigger going forward into the longer term, as envisaged by both the partners currently. And we are very hopeful that it reaches that level.
Okay, hopeful of that. And in terms of the business operations, will the joint venture primarily manufacture and sell cranes, or will leasing also be a part of the business model? And how should we think about revenue recognition, margins, profitability under this model?
The joint venture is basically an engineering design and primarily a manufacturing vehicle. So this will be producing machines for both ACE as well as Kato. ACE will be distributing and selling these machines domestically within the country, and Kato will be taking these machines internationally through their network. So the revenue recognition with respect for ACE would be the portion of machines which are being sold directly by ACE domestically. And obviously, the joint venture would, whatever is being exported as well as being sold domestically, that would be captured within the joint venture.
Okay, and Mr. Agarwal, since we have you here, we would like to understand how Saudi Arabia as a market is doing, given that there is now better clarity on war and real estate pricing in some parts of that market. Are utilizations rising due to that? Is it still too early to talk about that?
See, Saudi Arabia as a market for exports has been coming up as in a big way in the last 1 or 2 years. But definitely due to the war, the exports to Saudi and other things have definitely slowed down, especially because of the sea freights and the difficulty in the different ports because of the war. But going forward, we feel now that things are streamlining. The business to Saudi Arabia is definitely going to be on the upward.
Okay, understood. So that sounds optimistic, and we're going to be watching out for the revenue recognition, the margin impact on this joint venture. Congratulations, Mr. Agarwal, on going ahead and inking this joint venture with Kato. But on that note, viewers, it's time to slip into a very short break. On the other side of the break, we're going to be throwing the spotlight on a real estate company. We've got the management of Marathon that's going to be joining us. So we'll take the conversation ahead in just a short while from now. Stay tuned and we'll be right back.